Hello, Professor Wade. This is my video exam for the trial balance, adjusted trial balance, and the financial statements. So the trial balance is a listing of all the general ledger accounts for the company. So we'll have cash, inventory, accounts receivable, accounts payable, sales, cost of goods sold, dividends, every account. Once we have all these accounts listed, it'll be account title, debits, and then credits. Once we have the trial balance made, we'll have to make our adjusting entries for the period. So for adjusting entries, one type of adjusting entry is an accrual. So if you perform an obligation for a customer but you have not yet received payment, you'll have to make an adjusting entry for that. We have depreciation expense, where as equipment is used over the course of the period, it has to be depreciated. We have prepaid expenses, which if you prepaid your rent for the year, you have to make an adjusting entry for that now that you consume part of it. And we also have accruals, where it was paid in advance and now you have to make an adjusting entry for that. Once we make all of our adjusting entries and the adjusted trial balance is set the same way with account title, debits, and then credits, and the debits have to equal the credits. Once that is set up, we can move forward with making our financial statements. The four financial statements we will be making will be the income statement, the statement of shareholders' equity, the balance sheet, and the statement of cash flow. The income statement will start with sales, and then we'll have subtract away cost of goods sold, and then we will have our operating expenses section, which would be salaries, rent, and then any other expenses down at the bottom, which would be like interest expense. Once we subtract away and add whatever needs to be subtracted or added, we should have our net income for the period. Once the income statement is made, we'll then move on to the statement of shareholders' equity. The statement of shareholders' equity will start with the common stock issued for the period, and then we will add net income from the income statement, and then we will have our dividends that were paid out for the period, and the dividends will need to be subtracted away. So net income is added, dividends are subtracted, and then it leaves us with our total shareholders' equity. Once that statement is made, we move on to the balance sheet. So the balance sheet will be broken into two sections. It will have assets and then liabilities and equity. The assets will be broken into current assets, which would be cash, accounts receivable, inventory. And then the other section for assets would be property, plant, and equipment. So buildings, land, machinery, things like that. Then on the other side with liabilities and equity, the liabilities can be broken down into current liabilities such as accounts payable, notes payable, short term, and then salaries payable. And then we also have long-term liabilities such as long-term loans, so notes payable for there as well. And then finally, we would have equity, which would be our common stock, and then retained earnings for the period, which would just be our net income minus our dividends paid out. And once again, for the balance sheet, the assets has to equal the liabilities and the equity, so those should even out. And finally, the last financial statement we'll make will be the statement of cash flow. So the statement of cash flow will have three sections. It will have cash flows from operating, cash flows from investing, and then cash flows from financing. The cash flows from operating would be from day-to-day operations, so cash received from customers, and then salaries paid out to your employees, rent paid for the building, supplies bought. And then cash flow from investing would be purchasing machinery or buying land, investing in the company. And then cash flows from financing would be the issuing of common stock, paying out dividends. Adding up and subtracting from there, that will give us our net cash flow from the period, which could be positive or negative. And those are the four financial statements we would make from the adjusted trial balance. Thank you.